If you are over the age of 65 and you currently have more than $50,000 sitting in your checking, savings, or money market accounts, you are living under a dangerous illusion of safety. Your bank balance is a giant red target. You look at your bank app, you see that balance, and you think you are in control. You think that because you paid your taxes, paid off your mortgage, and played by the rules your whole life, the system is going to leave you alone. But the rules just changed behind your back. You are dead wrong. Look, here's the crazy part. Right now, as you watch this video, you have likely already been entered into a joint algorithmic radar operated by three distinct branches of the federal government. We're talking about the IRS, the Social Security Administration, and FinCEN. Today, I'm going to expose a hidden silent audit targeting American seniors. This isn't some guy in a suit knocking on your door. It's an automated financial meat grinder designed by the bureaucracy. It doesn't just take your money. It strips you of your autonomy, freezes your assets, and legally confiscates your Social Security checks before you even know you are under investigation. It's fast, it's cold, and it's 100% legal. This isn't a conspiracy theory. This is federal law, and I am going to show you exactly how one innocent financial move, something as simple as selling your home, can trigger a devastating chain reaction. This reaction leads to frozen accounts and massive federal penalties. More importantly, in Chapter 5 of this masterclass, I'm going to give you the exact forms, the precise legal language, and the exact sequence you must use to protect yourself. You need to watch until the end to get these forms. Welcome to the masterclass. Let's pull back the curtain on the system that is currently tracking your every move. Let's talk about how the trap actually gets set. To understand how this trap gets sprung, you need to see how completely innocent it looks on the surface. Let me introduce you to Margaret. Margaret did everything right, but she still lost everything. Margaret is 72 years old. 2 years ago, she made a completely normal, responsible decision. Her husband had passed away, the big family home was too much to maintain, and the property taxes were bleeding her dry. She decided to downsize and simplify her life. So she sold her house, she bought a smaller, manageable condo, and after the dust settled, she walked away with $150,000 in pure cash profit. She thought this was her happily ever after fund. She took that money and deposited it directly into her local bank. Margaret did her homework. She knew about Section 121 of the tax code. This is the rule most people think protects them. Section 121 says a single person can exclude up to $250,000 of capital gains on the sale of a primary residence, so she owed zero federal income tax on that home sale. On paper, she was completely in the clear. She filed her return, she put the money in the bank, and she went to sleep thinking she was financially bulletproof. She thought she had played the game and won. But she didn't realize the IRS wasn't the only player. Fast forward to present day, 2 years later. It's the third week of the month, the day Margaret's $1,800 Social Security check is supposed to hit her bank account. This is where the floor drops out from under her. She goes to the ATM, puts her card in, and the screen shows a deposit from the U.S. Treasury for $14. $14. That's not a typo. She hasn't been hacked. She hasn't been robbed by identity thieves. She hasn't been the victim of a Nigerian prince scam. She has been hit by a federal assassin program. See, Margaret thought her home sale profit was invisible because it was tax-free. But the government has a secret metric they use that is much more aggressive than taxable income. They call it MAGI, and it's a total nightmare. Because of how the bureaucracy is structured, Medicare operates on a 2-year delay. In year 1, you sell the house. In year 2, the IRS processes the paperwork. In year 3, the government strikes without warning. The Social Security Administration violently adjusted her premiums based on her income from 2 years ago, income that she thought was exempt. This is the Lookback rule, and it's a trap for the middle class. Make sense? Margaret's lifeline was wiped out overnight because of a tax-free house sale. But as terrifying as that is, losing the Social Security check is just the bait. What Margaret does next to survive is what triggers the real disaster. She's now sitting in her kitchen, staring at a $14 balance with a property tax bill due. She's about to make a mistake that could land her in prison. She thinks, it's okay, I have that money in the bank. I'll just go get it. But the bank is no longer her friend. Here is what Margaret didn't know and what your CPA probably forgot to warn you about. It's a hidden mechanism called the 2-year lookback rule. This rule is buried deep under Title II of the Social Security Act. Its weapon of choice is an acronym you must burn into your memory. IRMAA. IRMAA is the silent killer of retirement accounts. It stands for the Income-Related Monthly Adjustment Amount. Basically, it's a massive surcharge tacked onto your Medicare Part B and Part D premiums. Think of it as a luxury tax for people who aren't even rich. You see, Margaret thought her home sale profit was invisible because it was tax-free. But the Social Security Administration doesn't care about your taxable income. They look at your MAGI, your modified adjusted gross income. Even though Margaret didn't owe a dime in capital gains tax, that $150,000 spiked her MAGI on paper. Because the government moves at the speed of a snail, Medicare operates on a 2-year delay. They are looking at your life through a rearview mirror. In year 1, you sell the house. In year 2, the IRS processes the forms. In year 3, the SSA suddenly wakes up and decides to violently adjust your premiums. They base your current survival on your past success. Let me break down the brutal math of the IRMAA brackets for you. For a single person, if your MAGI is $103,000 or less, you pay the standard Medicare premium. That's usually around $174 a month. But if your income jumps just one single dollar over that threshold, boom, you are pushed into the first penalty tier. If you cross $129,000, it jumps again. In Margaret's case, that home sale pushed her past the $193,000 threshold. The penalty is absolute. Medicare doesn't send you a polite bill or a heads-up email. They just reach into your pocket and take it. They coordinate with the Social Security Administration and garnish your check before it even leaves the Treasury. They took over $400 a month for Part B and another massive surcharge for Part D. Plus, they retroactively charged her for the months she missed. Overnight, her lifeline was wiped out. But here's the thing. Losing the Social Security check is just the bait. The real nightmare starts when you try to fix the problem yourself. Margaret is now in a full-blown panic. Her Social Security check is gone, her property tax bill of $12,000 is due, and the bills are piling up. She feels the walls closing in. She has the cash sitting right there in her bank account. So she drives to her local branch, walks up to the teller and says, "I need $15,000 in cash." She just wants her own money to pay her own bills. The teller starts typing away. Now, you have to understand, this teller isn't just a bank employee. They are a trained deputy for the federal government. They are looking at AML, or anti-money laundering compliance screens. The teller asks a seemingly innocent question. "What exactly is this large amount of cash going to be used for, ma'am?" To Margaret, this feels like a massive invasion of privacy. She's 72 years old, she's stressed, and she's exhausted. She remembers a rumor she heard at the country club. She heard that any withdrawal over $10,000 gets reported. That report is called a CTR, a currency transaction report. Margaret doesn't want to be on another government list. The government just stole her Social Security. She doesn't trust them. So she makes the single most destructive mistake an American citizen can make. She decides to outsmart the system. She says, "You know what? Never mind. Just give me $9,000. She takes the $9,000. The very next day, she drives to a different branch of the same bank. She withdraws another $6,000. Total withdrawal, $15,000. Under the $10,000 radar, right? Smart move, Margaret. Except she just committed a federal felony. Under the Bank Secrecy Act, specifically Title 31, Section 5324, this is called structuring. Evading a federal reporting requirement by breaking up cash transactions is a crime. It doesn't matter if the money was earned legally. The bank's AI algorithm flags the transaction instantly. And here's the most terrifying part. The teller is legally prohibited from warning her. If they tell her she's breaking the law, they go to jail. Instead, the bank silently files a SAR, a suspicious activity report. This goes directly to FinCEN, the Financial Crimes Enforcement Network. Within 48 hours, Margaret's life comes to a grinding halt. She logs into her bank app to pay her property taxes. The balance is there, but there is a red padlock icon next to it. Her account is frozen, a federal hold. She has zero access to her life savings, her gas money, or her grocery money. She is now officially unbanked by her own government. And while she's fighting the bank, the IRS is preparing the final blow. It's called the Secure Act 2.0, and it's about to get very expensive. Make sense? Because we are about to enter the most expensive mistake of her life. We're talking about the 25% RMD penalty. So, Margaret is sitting there with a frozen bank account, no Social Security check, and a property tax bill that is officially overdue. But the government isn't done with her yet. You see, it's now late December, and if you are over the age of 73, December 31st is a date that should keep you up at night. That is the deadline for your RMD, your required minimum distribution. The government mandates that you withdraw a specific amount of money from your traditional IRA or 401k every single year. Why? Because they want their tax cut, and they want it now. Margaret knows she has to take out $20,000. She calls her broker at Fidelity or Schwab and tells them to send the funds. But there's a massive problem. Remember that red padlock on her bank account? Her broker tries to wire the money, but the bank rejects it. The funds bounce back because of the FinCEN freeze. Margaret tries to open a new account at a different bank, but guess what? Her name is now on a federal blacklist shared between banks. No one will let her open an account while an active SAR investigation is pending. December 31st comes and goes. The ball drops in Times Square, and Margaret just missed her RMD. Under the old laws, the penalty was 50%. Under the new Secure Act 2.0, they lowered it to 25%. But 25% of $20,000 is still a $5,000 heart attack. The IRS doesn't care that your bank account was frozen. They don't care that the SSA took your check. To them, you are just a line of code that failed to comply. So let's look at the damage. Her Social Security is gone. Her bank is locked. And she just got slapped with a $5,000 tax penalty. This is how the American dream turns into a bureaucratic nightmare in less than 90 days. But this is also where I tell you exactly how to fight back. Make sense? Because we are moving into the rescue phase of this masterclass. I'm going to give you the keys to the handcuffs. If you or your loved ones ever find yourselves stepping into this minefield, panic is your absolute worst enemy. You cannot fight an algorithm by yelling at a customer service rep. You have to be clinical. You have to use their own paperwork against them. We are going to perform a bureaucracy jujitsu move here. There is a very specific sequence you have to follow. If you fix the bank before the IRS, you bleed out. If you fix the IRS before the SSA, you starve. Step 1. You have to terminate the IRMAA trap immediately. Most people think they just have to deal with it for a year. That is 100% false. The Social Security Administration has a secret backdoor clause. You need to download a document called Form SSA-44. This is the life-changing event form, and it is your golden ticket. When you sell a house, the computer thinks you're suddenly a millionaire. You have to prove to them that your income has dropped back to normal. But here is the secret. You can't just write, "I sold my house." Selling a home is not officially a life-changing event in the eyes of the SSA. If you write that, they will reject your appeal in seconds. You have to look at step 1 of that form and check a box that actually fits their criteria. For most seniors, that box is work stoppage or work reduction. If you retired or even just stopped doing a side hustle the same year you sold the house, that is your event. If your spouse passed away, you check death of spouse. You attach your documentation. You show them your current lower income, and the SSA is legally required to recalculate your premiums. They will even refund the money they already garnished from your check. It takes about 30 to 60 days, but it works 95% of the time if you use the right language. Now that your check is restored, we have to deal with the bank. Now, let's talk about that red padlock on your bank account. This is where most people lose their cool and make things worse. If you find yourself flagged for structuring, you have to understand the difference between two federal forms. The first is FinCEN Form 112. That is a CTR, a currency transaction report. Most people are terrified of this form, but it's actually your best friend. A CTR is just a boring administrative receipt. It tells the government, hey, this person took out more than $10,000. That's it. It doesn't trigger an audit, and it doesn't freeze your account. The second form is a SAR, a suspicious activity report. This is the one that destroys lives. This is what the bank files when they think you're trying to hide something. So here is the rule. Never, ever structure your withdrawals. If you need $15,000, take out $15,000. Let the bank file the CTR. If the teller asks what the money is for, don't get defensive. Don't tell them it's none of their business, even though it feels that way. Just give a boring, legal, compliant answer. Say, personal liquidity or major home renovations. These are green light phrases that satisfy the algorithm. By taking the full amount, you bypass the SAR algorithm entirely. But what if your account is already frozen like Margaret's? You need to walk into that bank with a copy of the Bank Secrecy Act. You ask to speak to the BSA compliance officer, not a regular manager. Show them the documentation of your home sale and the property tax bill. You prove that the funds were legal and the intent was not to evade taxes. Once the human officer sees the paper trail, they can usually override the AI freeze. Now, let's kill the final boss, the IRS and that 25% RMD penalty. You are not going to pay that $5,000. You are going to file IRS Form 5329. This is the Additional Taxes on Qualified Plans form. But we're going to use a specific loophole. On line 54, you write in the amount of the shortfall. But right next to it, on the dotted line, you write two letters, RC. RC stands for reasonable cause. You then write a 0 in the penalty column. You attach a short, professional, and totally unemotional letter. You state, I missed the RMD deadline due to an unexpected banking freeze restricting my account access. You tell them the shortfall has been corrected. The IRS waives this penalty 99% of the time if you use this exact procedure. They just want to see that you're trying to comply. Look at what we just uncovered here. The system is designed to be a series of disconnected traps. The IRS doesn't care that FinCEN froze your bank. FinCEN doesn't care that Medicare stole your Social Security check. And Medicare doesn't care that you just wanted to downsize your home. These are silent algorithms running in the background. They feed off the financial illiteracy of the American public. The system isn't broken. It's functioning exactly as it was designed. It's designed to penalize those who don't know the secret handshake. But now, you know the handshake. You know the exact forms, SSA-44, FinCEN 112, and Form 5329. You have the map to walk through the minefield without losing a limb. Information like this isn't taught in schools, and your bank is literally legally restricted from telling you about it. It is up to us to protect our own families and our own savings. If you got value out of this masterclass, I need you to do 3 very specific things right now. These 3 things help keep this channel alive and protect others. First, hit the like button so the YouTube algorithm pushes this warning out to more seniors. There are millions of people like Margaret who are walking into this trap today. Second, hit subscribe and turn on the notification bell. My team and I are dropping deep dive intelligence like this every single week. And most importantly, share this video. Send the link to your parents, your friends, and your neighbors. You might just save someone from losing complete control of their life savings. I'm your host, and I want to thank you for sticking with me through this masterclass. Stay vigilant, stay educated, and never let the system take what's yours. I'll see you in the next one. Your financial freedom depends on what you do next.